Concerning economics, there is an important concept that often is ignored. Aristotle's Nicomachean Ethics is based on deciding whether actions are extreme, intermediate, golden mean, or defective. When stores are filled and supply lines are unbroken, people generally associate that with the intermediate, golden mean. And when the stores are empty and the supply lines broken, that is defective. That raises a question: what is extreme? The economic answer to that is the concept called overtrading. Adam Smith in Wealth of Nations explains overtrading like this: if, notwithstanding all this, gold and silver should at any time fall short in a country which has wherewithal to purchase them, there are more expedients for supplying their place than that of almost any other commodity. If the materials of manufacture are wanted, industry must stop. If provisions are wanted, the people must starve. But if money is wanted, barter will supply its place, though with a good deal of inconveniency. Buying and selling upon credit, with the different dealers compensating their credits with one another, once a month or once a year, will supply it with less inconveniency. A well-regulated paper money will supply it not only without any inconveniencies, but in some case with some advantages. Upon every account, therefore, the attention of government never was so unnecessarily employed as when directed to watch over the preservation or increase of the quantity of money in any country. No complaint, however, is more common than that of a scarcity of money. This complaint, however, of the scarcity of money is not always confined to improvident spendthrifts. It is sometimes general throughout a whole mercantile town and the country in its neighborhood. Overtrading is the common cause of it. That is hardcore. Even when money is gold and silver, if you have to go into exorbitant debt to support trade, you have overtraded. Now, soberly contemplate that all Federal Reserve notes are obligations of the United States of America, 18 U.S. Code Section 8. They are debt. It is important to understand the difference between paper money, greenbacks, and debt-based instruments like the Federal Reserve notes. Our stores, our supply lines are 100% funded by obligations. It would be an understatement to call that overtrading. We need something stronger, like Newspeak from Orwell's 1984, a good catchphrase like double plus overtrading. Yes, the concept of overtrading is so wildly ignored as to make any criticism seem banal, dismissible by the unthinking. But the real danger is to not have a grasp on what is extreme using ethical standards. Patriots have a hard choice concerning the future. Support the system that provides some fairly awesome supply lines, but does so based on ever descending debt, versus equitable allegiance where the government does not prop up trade with debt, with the understanding that this course will severely curtail trade in the short term. There are a couple other important things to consider. 100 years ago, common people held stock jobbers in poor esteem, lazy scam artists at best. The Federal Reserve admits it was a major contributor to the stock market crash of 1928, leading the whole country into a decade of depression. Think about how the mainstream media pushes the stock market's current status upon the people as a great indicator of the economy's health. Having all the money in the stock market is not health, it is gambling. Another thing to consider is the quality of life in the 1960s with today. We started full tilt trading with communist China in the 1970s and have been flooded, nay fluffed, with a tide of cheap consumer products. And that has all ridden on the back of the Federal Reserve note obligations. So what is the danger? There is no immediate tangible danger. The debts funding our overtrading are not going to be called in. The national debt is not going to be reduced or repaid. What? Is the government going to call in 10 trillion Federal Reserve notes to reduce the national debt? That is not going to happen. There is a long-term danger with our overtrading, and an humbling question that should be asked when you walk into a store. Am I worth this? Ethically, Aristotle would associate what we are doing with the extreme and not the intermediate, golden mean.